My dear friends, family, fans, subscribers from around the entire world, welcome to another incredible interview with a phenomenal human being. This is Annie Lee, and Annie and I have connected in a mastermind sales program called Unblinded, and I wanted to reach out to her and connect with her and make sure that I introduce you all to her and her specialty and her capability. She has a lot of experience and knowledge in the investment banking space. So I figured I would ask her tons of questions. I'm sure you guys have tons of questions for her as well. But before we start, Annie, can you just give us a little bit of background on you? Where do you live? Where are you from? Give us all the good stuff.
Yeah, Jeremy, this is such an honor to. So, thank you for this opportunity. My background is on Wall Street. So I graduated from Wharton, graduated with a degree in finance, and then went straight into investment banking, both in Los Angeles and in New York. So my specialty is really dealing with a lot of mergers and acquisitions, debt financing, getting companies out of basically restructuring situations and finding the financing for those situations. So happy to answer any questions you have, and just happy to be on here because this is so much fun.
Yeah, this is going to be really cool. This is going to be so fun. The first question that comes to my mind, do you have any knowledge or thoughts or opinions on the special acquisitions SPACs that have been coming up lately? Very, very popular. They've been around for a while, but they've been extremely popular as of recent days, weeks, months.
Yeah, it's been a very hot topic in terms of investment vehicles. And we've definitely seen a lot. Like, part of what I do right now is I teach investment banking to investment bankers. And on the side, I also run a separate company where we are acquiring these assisted living facilities. So we're seeing in this space where SPACs have become a very popular tool to go and raise capital and bring these companies public. So it's been very interesting to watch as just like to see how the economy has really geared towards the space.
When you say companies, like, how is a SPAC different from a direct listing, like a DPO? Or do you know that answer?
That's not my specialty, but from what I know about direct listing, it's an IPO, but not in the traditional way, right? So direct listing is you're going out and seeking investors by yourself, like the company itself is going out there and finding the investors, instead of you relying on an institution like an investment bank or usually an investment bank to help you secure those investors. So there's no institutions that backs your IPO. It's primarily the company itself. And so we see a lot of direct listing. Coinbase, you probably know, that just went public. Was it a few days ago?
Yep.
Or last week?
Yeah, a few days ago. Yep.
A few days ago. It seems like forever. But they went through a direct listing, and now Kraken, one of their competitors, is going through the same method and seeking runs of funding. So that versus, you were asking about SPACs, right? So SPACs is different in that they're raising the capital with these institutions, and then you have all these investors already invested in the pool, so that they can go out there and do the actual acquisition. So no acquisitions is actually happening while they're getting the investor. They just have the capital in place, so now they can actually go and do stuff, versus direct listing is you have a company that's fully in operations, and they're getting investors to take it public, essentially.
That's super helpful. That clarifies a lot. Thank you.
Yeah.
Okay. So this is a dumb question, but I ask dumb questions a lot. What's the difference between an investment bank and like a normal bank?
Like a commercial bank versus an investment bank.
Sure.
Absolutely. This is actually a question that I focused a lot on as I was going into the industry, because I worked for a commercial bank as well. At Penn, we have a credit union. It's completely student run. Different story if you want to hear about it. But it's all the functions of a regular bank, where you have the investment division, you have the customer facing, like member services, you have a department that deals with giving out loans to individuals and also companies, right? So a commercial bank is for the average consumer, with a lot of the banking operations like deposits, withdrawals, loans, versus an investment bank. It's a lot about the capital markets, and the deal sizes that you're dealing with is much bigger. So when I was working for a bulge bracket investment bank, the lowest amount that we did in terms of debt raising was 200, 300 million, just because that was the size that made sense when we reached out to the capital markets for investors. So I guess size would definitely be a key difference in terms of how to differentiate these two, but also the consumers, the customers, right? So for commercial bank, you're looking at individuals or small businesses. For investment banks, you're really servicing the needs of these bigger corporations and also the investors who want to invest in these bigger corporations.
Totally. So can a commercial bank then also be an investment bank? Let's say, for example, Wells Fargo or Bank of America as an example.
Yeah. So Wells Fargo is a good example of a commercial bank that services people like you and I. And they also have an investment banking division where they service these big corporations. So there are two different functions that a bank can house. But there are also banks that either do one or another, right? So you can exclusively be an investment bank and not have the private banking operations. Credit Suisse, actually, I worked for Credit Suisse. Credit Suisse is a good example. In Europe, they have both the investment banking arm and the private banking arm, right? They're huge in Europe. But in the United States, in the Americas, they've separated that, so it's only investment banking focused. They don't really have a balance sheet here in the US.
Got it. Okay. Can you walk us through kind of the investment banking stages, if you will? So when a company is about to raise capital, they are going out after corporations, individuals, and businesses. Is that something that the investment bankers do themselves? Do they actually go seek and try to raise the money, or do corporations come to them and they're just offering the raise directly?
So let's talk about, you want to talk about the capital raising specifically?
Yep.
Okay. Usually what happens is there's a lot of different functions that investment bank does. So we're now focusing on the financing portion of one of the services that a corporation may have. So say you want to raise, a 300 million loan because you want to do something with your company in terms of capital expenditure, or you want to go acquire, a smaller company. So you go to a corporation, a business would go to an investment bank, hey, I want to take out a bond or a loan for this. And our job then is to help you sell your company, not sell your company, but sell the business to the investors so that the investors would feel compelled to invest in your debt and whatever rate you offer it. And part of that function is figuring out, this is my work, is figuring out how your company's doing. So doing all the due diligence work, figuring out the projections, running through our lending committee. So we give you a certain rate that we think the market will like. And so there's a lot of negotiation that goes on there. And if the investment bank gets picked for that specific mandate, so if you were, Jerremy company were to seek out my investment bank, you'd probably go to multiple investment banks to seek out that best offer of what is the lowest rate that you can get for a $300 million bond, right? So say you pick me. My job as an investment bank is I'm going to use the existing relationships that I've built with these institutions that I've worked with for many, many years on many different transactions. I'm going to go to my sales team and tell them about this project that we have, give them all the numbers so that they can communicate to their investors about what an excellent opportunity this is. So we're responsible for getting the capital for you. And then once we've raised that capital, you have your bond or your loan or whatever you're trying to seek. And that's when we close the deal.
Got it.
So that kind of makes sense?
Yeah, totally. Did you deal more with the bond side of that or the actual debt side of that?
I worked on primarily the debt side. So when I first started my career, it was financial sponsors, dealing a lot with private equity companies. And then when I moved over to New York, it was leverage finance. So leverage is anything that has to do with debt, bonds, loans, lines of credit.
Got it. So you mentioned that the investment side would determine the rate that the market would deem potentially acceptable. How do you determine that rate? What numbers are used and what kind of figures are interpreted?
Yeah, well, I think, in terms of rate, everything has to be relative, right? So there is a certain risk that deals with the market risk. That's the conditions of how the market is going, whether this is a high rate environment or low rate environment. There's also the risk of the actual company. So on top of how the market is moving, you have the risk of investing in that specific company. And usually how it works on in terms of in the debt world is the company gets graded. So it could be a AAA rating, it could be a lower BB, or there's just like a series of rankings, and depending on that list, where you fall on that list is where you get your corresponding rate. Very similar to if you were just going out to get a personal loan and you have your credit score, right? Depending on your credit score and your credibility, then you get assigned a certain percentage of borrowing.
Yeah, that totally makes sense. Do businesses have credit scores?
So that would be their credit score, right? So on a bigger institutional level, their credit rating is a series of letters. And there are several agencies, just like with personal, there's Experian, there's TransUnion, you have different credit score numbers. Within the corporate world, there are different institutions that give you different credit ratings. Some are more reputable than the others. Not more reputable, but more highly used than the others. And that's what people use to match up with their rate.
Got it. So is AAA rated the highest rating you can go?
Yeah, that's right.
What's the lowest? F?
Oh man, I don't know. It's been a while, but it's not. It's like a C, triple C minus.
Triple C.
And there's different, and
Triple
that's
C
only
minus.
for one of the rating agencies, right? So for different agency, they use a different combination. So for example, there's like something that could be BB, could be like BA, right? So it's different ways of naming the same class for different rating agencies.
How many investment banking specialists will work on a single
transaction?
So for example, taking one company to go public, like how many people would work on that are trying to go public?
For a bigger deal like an IPO, you have quite a few different departments at play because the process itself is pretty complicated. So that scale would be different than raising a 200 million tag-on debt, tag-on bond, right? So you can go from, so when you're dealing with these lower effort transactions where the issuer is already in the market, it's just like a tag on to what their existing debt levels are. It could be as few as a managing director managing the whole relationship and an analyst doing the day-to-day work. So on the investment banking side, it would be maybe 2 people. That's as little as it could get. Of course, they also have to interact with like the sales and trading team to actually get this transaction through and sell to the investors. So on that side, I don't really know the specific numbers, but they have a team of people who do multiple projects, right? So it's not just like one team specialized on this project and that's all they do for the entire day. People have different projects along the way. Then same for the investment banking side. If you're talking for a larger transaction like an IPO, I'm sure there is an industry team, there's a product team involved. Depending on what kind of debt or equity you are raising, there's different departments that are focused on that specific instrument. So it could be pretty big in terms of the deal team.
Yeah. Totally. And how long, what's that window that like a whole department would be focused on a company and that raise? I mean, I know it can vary, but what would be an example for a company?
It really depends on the situation. I know that's an answer that you hear very often. It also depends on the process of the IPO of the company, right? Like depending on whether or not it meets certain regulatory standards, it can either be a quick pass or it can take years. So I worked on the T-Mobile Sprint merger. Now it's like 5G and it's massive. That took many years. I was on the desk for 2 years. I was on that account for all of the 2 years. And when I left banking, it still didn't go through. So that just goes to speak. There's many different processes in what it takes for an IPO to get through.
Sure. Got it. Okay. Some personal questions then, Annie. What did you like least about that role?
What do I like least? I would say the work-life balance is not great. There's no such thing as work-life balance. It's work-life integration. It's what we've been taught. You make different decisions based on what you want. Honestly, that in itself wasn't because if you want to frame it a little differently, when you're really early in your career, you want to go crank anyways. And so going into this role, the expectation was that your work, banking, was your top priority. And people hire for that. So it was expected when we came in that this is going to be your life. And frankly, in the beginning, it's very exciting to get involved in these major transactions that can impact the world on a global scale. And stepping away from that, it's like now that I'm starting my own business and I'm looking back on the transactions that I've done, I'm like, what? You got to do that out of graduation? That's amazing. But when you're deep in the work, it's like you get lost in the numbers and you forget the bigger impact unless you take a step back and really, really like see what you're doing. I have a perfect example of this, Jeremy. Tell me. So I worked a lot on casinos and developing new projects in Vegas. Okay. So downtown is what we worked on a lot. And I remember one of my last deals was this, I won't go into the project specifically, but basically is to revitalize downtown, and a new construction was being built. It was going to be the top notch of downtown. It was going to be top technology, and this is going to change the industry and the dynamic of what downtown in Las Vegas is, right? So I was working very intensely in the project, and I was one of the key players doing all the financing work to make sure that the proper debt and financing came through. Last week, I was in Vegas for a Plaid event, and I got to see what it looked like in person. And I got to see downtown and all the pictures that made sense, right? Downtown 10 years ago versus downtown now. To see the actual building that I helped finance, I felt like I was the architect of that project. You know how when architects, they write out a blueprint and they see the thing come? I was like, wow, I made this happen. And it was just such a fulfilling feeling.
That's cool.
So looking back,
that's really cool. Yeah.
Looking back, that was definitely one of the downsides. So just like if you have other focus areas, it's not as flexible. But looking back, it was so worth it.
Love it. So is it true then? 140-hour weeks, like just grind city, 15-hour days, 7 days a week.
59. I would say the average is probably, depending on what bank you work for, but usually the bulge bracket is anywhere between 80 to 120.
Yeah, got it. And is it only
Yeah.
New York City, or can it be in other cities?
Oh yeah, definitely. I mean, I worked in Los Angeles for some time. There are some really intense shops in different pockets of the world. And I think,
Yeah.
some people have different opinions about that too. Like, is it less intense? Is it less rigorous? But sometimes you find that in these satellite offices, the work can be even more rigorous because you're kind of your independent unit, right? You don't have all the direct support of, say, New York. So while you do have access to them, a lot of the times you're working in your own little bubble. So you're
Mhm.
pretty much self-sufficient for a lot of these functions.
What then will be the biggest perk for your role, for that role?
Investment banking is the gateway to every single finance position imaginable.
Oh, nice. That's a cool term. I like it. Every single one of them.
Every single one of them. It's because the breadth of the technical expertise, or at least exposure, right, sets you up for either the confidence or and also the ability to tackle all areas of finance. So it's the perfect foundation where anywhere in finance that you want to go afterwards, it relates, right? Because sometimes you can get into very niche topics and you can't it's difficult for the knowledge to be transferable. And actually, I'm curious, from you're in the sales area, there's probably some focuses in sales where it's relatable to some areas, but a little bit difficult to carry on to other projects, right? Yeah.
Yeah.
So that's why
absolutely.
I thought the main perks were it's so transferable. And I would even say, for me, an even better part of it is the experience. I never thought I would be a banker. I thought it was the perception that I had in mind was it was too cutthroat, it was too intense. What kind of person would go into a role where you have no time for yourself? But that experience, it transformed my work ethic and how I viewed my capacity for what I can contribute as someone junior.
Got it. Great answer. Thank you for sharing that with me. All right. Some more back to technical questions. How does an investment banking firm, what's the formula for determining the amount of shares that a company actually has when they IPO?
How many shares they want to issue?
Yeah.
I didn't deal too much on the equity side, so I don't know if I'm the best person to ask. But it has to do with obviously the total value of the company, right? And also, what is the investor pool? How much, how many people are interested? So the number of investors, the number of people who are interested, and also has to do with the market dynamics. So your peers in the industry, how much are they trading? And so it's a mix of different factors: size of your company, your peers, historically, what has this been done? I'm not the best person to ask for this because there's definitely details, but on a bigger picture, it's that dynamic.
Valid answer. Yeah. So in that situation, then, with the investors, do most companies invest into things like this, or is it individuals, in your opinion?
Investors who work with investment banks?
Yeah. So is it more like companies or direct individual? Well, yeah, individual people.
Both, honestly. There are definitely institutions like a lot of insurance companies or pension funds or different funds. Also, people might have, say you have a high net worth individual and they have their private fund to invest. That's typically the route, because investment banks are looking for probably these bigger ticketed investments. Now, if you're looking at like the IPO segment of raising equity, there's a lot of different ways that you can invest in an IPO, right? So you have maybe you have an organization that is reaching out to institutions where you're allocating a certain amount that are bigger ticketed. Now those individual entities, say they have, I don't know, 2 million or 20 million in allocations, right? Within their company, they can start looking for investors with a lower ticket amount. So they can work with brokers to say like, okay, I'm going to give this broker A 2 million allocation. We're maybe working with 10 other brokers with 2 million each. And then that specific broker can be like, now that broker can reach out to an accredited investor like you and I, if we make a certain amount of income and say, hey, Jerremy, look, here's a pre-IPO opportunity. You need to invest minimum $25,000. And I'm working with X number of people just like yourself to get to a $2 million allocation.
Got it. Okay. So they're pretty much they're on the phone, still making calls to the people on the list. How do people get on that list? Or is it just some research? Anyone can be on that. Well, not anyone, obviously accredited investors, but how do they obtain those names?
So you're talking about the lower levels?
Yep.
Or at the investment banking, working with investors?
Yeah, so the investment banking, them specifically reaching out to accredited investors like the sales team, how do they get the names of the people to do?
Got it. So I guess take a step back and say the investment banks themselves don't go out to go look for like new people, right? Usually they have institutions that they worked for a lot. Like they've been working with the investment team of said institutions for quite a bit of deal. And the job really is not to find new relationships. It's always nice to have new relationships, right? But it's usually they have existing relationships with different funds. And their job is to sell this debt instrument or this equity instrument to these institutions and say, this is why you should invest in this deal. This is why you should invest in this IPO. This is why you should invest in this, I don't know, 2 billion debt raise. Because we, the investment bank, see this company as going through a massive shift in growth. It's a safe investment. They're going to produce a lot of cash flow. You're going to get payback, or you're going to get a certain return on your investment. That's the job of the investment bank. They're the sell side. They're selling the investment to the investors. Does that make sense, Jerremy?
It's more about the relationships, current relationships, rather than going out and getting new existing clients more often for the investment banking, correct?
Yes, yeah. So to help frame this a little better, the investment bank you can think of as the sell side, right? They are helping sell the investor or the investment, whatever that is, the debt instrument, the equity investment, to people who have money, these funds. And the job is more of convincing them that this is a worthwhile investment, rather than going out there and soliciting like folks like you and I. That doesn't really make any sense. Right? So these institutions already have and like money. That's their job. Their job is to pool the people like you and I, accredited investors or wealthy individuals, to employ their capital in some way. That's the purpose of their fund. And so the investment bank goes directly to these funds who already have capital and who already have engaged in multiple deals in the past, to convince them that this deal is worth investing in.
Got it. Okay, that makes tons of sense. Thanks for that clarification. Because again, this is something that is brand new to so many people, and I think it's amazing to get such awesome insight from an incredible human being like yourself. So it's good.
Thank you. It's fun. It's fun in retrospect. In the moment, it's like, oh, so many things are coming and flying at you. But it's a really cool process.
Is it tons of spreadsheets and like Excel, or is there other formulas? Like I'm just envisioning an analyst and investment bankers just sitting down, just like doing spreadsheets all day, just cranking out numbers. Is it more glorious than that?
Excel is a tool, right?
Yep.
So it's what does that spreadsheet tell you, and what are you doing with that spreadsheet? Right now I teach investment banking to onboarding investment bankers. We focus a lot on this. I'll just tell you a glimpse of the training program, because this encaptures the skill sets that you need, right? So it's about 3 weeks. We spend a week on accounting fundamentals, because accounting is the language of finance. And then for the remaining 2 weeks, we teach them everything from how to value a company, so corporate valuation of corporates, how to do it through different methodologies, right? Like discounted cash flow, or comparable analysis, acquisition comps, peer comps. And then we also teach them how to do like a mergers model and a leverage buyout model. So there's different components to it. At the base of it, if you need to do anything with numbers, it is in the form of Excel, right? So,
Sure.
A lot of time is spent in the actual Excel. A lot of time is also spent in creating presentations to sell it, to present to either clients or your internal team, or to investors.
Yeah. Got it. Okay. Well, I mean, that makes sense.
Yeah.
It's just a tool. There's probably a million other tools that obviously are used. And that's really interesting that you mentioned. I don't want to gloss over that. You stated, Annie, that you right now teach onboarding investment bankers. Are you creating a company for that? Is that already built? Is that something that you are doing is that different than university teachings, like going through a finance degree? What's that look like?
Yeah. So I work for a training company now, the same training company that trained me when I was onboarding as an analyst. Mm-hmm. And on the side, so this is, me giving back to the investment bankers, like the younger people who are onboarding. Like, this is my way of, here's everything that I've learned, right? There's a structure in terms of what you need to know. And I am trained by this training company, Training the Streets, to pass on that knowledge. And there's a structure for that. And then on the side, I'm starting my own company in the space of mergers and acquisitions that parallels perfectly with the things that I'm teaching. Because I have a fundamental belief that you can teach theory, but the best teachers are those who also have practice, right? And especially it's current practice. Someone who's in the field right now teaching you what they know versus someone who's been in the field a decade ago trying to teach you that. And so this is slightly different from academia, because you see a lot of these people coming out of undergrad or grad school with a lot of theory. In a perfect world with the perfect assumptions, this is what you would do. Here's like the Black-Scholes model, or like the person who invented this concept. And in the real world, what are the things that actually matter? That's training program, right? That's not the educational of like a business program. The training program is like on the job. How do you get this done accurately, quickly, effectively? And how do you do it in a way that is suitable for the current market?
Mm-hmm. Would you have to go through college to go through that course that you provide?
The course in itself, no. Right? The course in itself, you can pay for it online. You can, like, there's so many resources online. Like, that's free. Also, just learn about what the concepts are. Sure. But do you have to go to college to get into investment banking? Maybe that, like, I don't know the answer to that question. I have not seen a person who has not gone to college, and it's not because of the skill set, right? The key is not the skill set. The key is this is a highly competitive industry. And so if you didn't go to college, you better have some really impressive thing that you've done in the past that proves that you are on the same caliber as your peers.
Yeah. That kind of reminds me of that movie 21, where he was like counting cards and he was trying to get like the scholarship, and the guy was like, what impressive thing have you done? Tell me. And he was like kind of telling the life story.
I think, look, finance is extremely easy, It's like, in terms of, if people talk about, hey, look, finance, you need to know a lot of, like, you need to be good at math, right? But realistically, like, the math that you do on a spreadsheet is like basic addition, subtraction, multiplying, dividing, and then you throw in a bunch of functions. So it's not conceptually difficult to understand. It's just the practice of it. Like, there are different processes, and this is how you think about something. That's the hard part.
Yeah. So on that note, tell us of something that, when you were in that position, that you did that was kind of outstanding, that you thought was or is amazing.
Oh man, I have so many really magical moments. And it has to do less with the technical side.
Okay.
I would say one of the best moments was having the ability and the access to go to these investor meetings and interacting with CEOs and CFOs of these companies. So to give some context, this is like me graduating undergrad, right? I was like 21. And we were on a deal where it was just me and my managing director. It was a very small deal team. We were working directly with the client, and there were just like these moments where, when you really connect to, like, I really connected to the CFO, and he gave me all this, like, how he got started in the company and his entire backstory, and like his advice for me and what he sees in the company. Just having that exposure to that level of conversation was mind-blowing for me.
Oh, I bet.
And there were many of these situations, Jeremy, where, like, wow, to be in the same room and for them to really value what you're doing, right?
Yeah.
It's amazing. It's the most amazing feeling.
So what's the next 5 years look like for you, Annie?
For me, so remember I told you that investment banking is the perfect foundation for whatever you want to do. Yep. So when I was in banking, a mentor had come to me with, he does a lot of acquisitions. And so he gave me the idea to do my own acquisition projects in the space of senior living. And especially with COVID, the two industries that we're seeing booming is anything that's tech related, anything that's healthcare related. The other industries are sort of falling by the wayside, and at least for this model, is not really a viable solution. So I've started a company during COVID, and we acquire assisted living facilities. Our vision is to consolidate senior care, consolidate assisted living. So next 5 years, the vision is quite big, and it's because, like, this industry needs so much help. This is the biggest growing sector. Baby boomers are the biggest population that is coming online, and they're at that age where they're looking at nursing homes and senior care. And so that, senior care space is the demand for senior care is just increasing like crazy. And there's not enough of supply. That's why you see so much development projects in assisted living. But the main problem is that most of these facilities are very small. It's highly fragmented. So you might have some big players, but the average size of assisted living is 33 beds. Very, very small. It's like if those are shared, right? That's like, 16 rooms, 16, 17 rooms. And so, as you can imagine, with these smaller facilities, there's a lot of operational inefficiencies. There's a lot of benefits that they could have through economies of scale. So our vision is we're going to acquire these facilities, and we're going to package them in a common branding for a vision of assisted living that actually promotes health and vitality and a better life, better care for senior citizens. In 2 to 3 years, we plan to take this public. 5 years is definitely a very far future.
So big. Yeah.
So,
totally.
Right now we're aiming to 2 to 3 years. That's our horizon.
Well, congrats. That's amazing. I know that we talked a little bit about that in the past, and I think that's so exciting. We have someone in the chat pane, his name is Terry, that he has a friend who owns several of those. So Terry, you mean your friend Joe owns a lot of the senior care living facilities? Is that what you're saying, Terry? Okay, got it. Cool. Well,
Yeah.
I'll make sure to connect you to Annie. Why not? You and Joe could chat. If you're looking at acquiring those, it's always good to have someone who has some.
Yeah, we need more heart-centered, integrous people in this space. It's an
Agreed.
industry that needs renovating.
Yeah, totally agree. Absolutely, because that's, in general, I've heard so many horror stories about elderly men and women just getting injured or beat up or hurt in specifically different, assisted facility living spaces where they're just not getting treated the way they should, and it's awful.
Yeah, it's interesting that you mentioned that, because I think the preconception that people bring into this industry is that there's a lot of wrongdoing, right? Like, the people are just not doing the right things, and if only they had some heart, or if only they were a better person, then this would change. And what most people don't realize is it's not malintent. It's just that these facilities are so crunched for cash, because they're so small usually, that they don't have the capacity to have 2 people on staff, right? They're so clenched that it only makes sense profitability to have one. And yes, there are people who want to profit off this, right? But there are honestly people who want to give quality care, but they can't afford to. Their business would not exist if they were to put 2 people on staff. And so it's just a very tight industry. And that's why we need more capital, more consolidation in this very fragmented space.
Got it. Okay. I really appreciate you sharing that. And that's shedding a light on something like that. It's interesting to see that you have such grandeur vision for 2-3 years. And I'm extremely confident you're going to reach those goals. I hope that you're able to do exactly what you seek, fulfill your missions and help hundreds of thousands of people not only become better in their livelihood, because that's something that's a direct impact to them, also their health, also their families, their families, their lineage, their legacy, and of course has the capability of helping owners, business owners, property owners, building owners. I'm just trying to think of so many impacts that would have. That's a big deal, Annie. That's huge.
Yeah, I mean, look, Jeremy, I look to people like you, right? And this massive enterprise that you've built of influence and value adding, all within such a short time, and you're able to reach directly to people who need it. It makes my vision seem like it's achievable. And so you're actually one of the people that I looked up to for inspiration, not only because you have this massive heart, but you have heart that's combined with math, right? You made this work with multiple businesses, not just with this one. And you have an extremely fulfilling life with your wife and your friends and this community that you've built. So I see that as the next level of possibility. And that really contextualizes my vision as, okay, it's achievable. I just need to focus. I need to surround myself with the right people, just like yourself.
So amazing. It's going to happen, Andy. I'm thrilled for you. I really am. I'm mega excited. I'm totally stoked. Annie, you are beautiful. You are intelligent. You are a phenomenal speaker. You're a great interview podcast person to discuss things with and topics with. Sorry for the internet cutting out earlier, but I really, really appreciate your time today. I appreciate your energy. I loved your insights. It was a great discussion. And this is something that so many people will get insight from as well. And I'll make sure to connect you with Joe. Just why not? If it's in the chat pane, I know Terry's a good friend of mine. So anyone that's a good friend of Terry, if he owns exactly the thing that you're trying to acquire, why not piece those things together? That makes a lot of sense. But amazing time, Annie. Thank you so much for being here and for sharing your day with me.
Thank you for having so much fun with me. This has been great. I love your energy as well, and I know you're going to do extraordinary things, Jeremy.
Thanks, Annie. You're awesome.